Hey there, real estate watchers. Andrew Finney here. What if I told you that Democrats and Republicans are actually agreeing on something in the housing market? Believe it or not, housing affordability is becoming the unlikely hero uniting voters across party lines in key swing states. As always, I'm bringing you the latest insight straight from the front lines of the housing market. With over a decade of real estate experience and helping many people achieve their real estate goals, I'm here to break down the complex world of real estate into bite-sized, actionable information for you. Let's kick things off with our top stories. Housing affordability is uniting voters across party lines in key swing states. Despite a rise in inventory, homebuyers are still playing it cautious. Younger homebuyers are expressing concerns about AI in the mortgage process. The Fed is hinting at potential rate cuts, but the timing remains uncertain. Housing demand is holding steady even as mortgage rates climb. Buckle up, folks. We have a lot to unpack. Our main story today focuses on a fascinating development in the political landscape: housing affordability as a unifying issue in swing states. According to a recent study by the Program for Public Consultation at the University of Maryland's School of Public Policy, there's a surprising consensus emerging in key battleground states. The study, conducted across Arizona, Georgia, Michigan, Nevada, Pennsylvania, and Wisconsin, found that voters from both sides of the aisle are rallying behind policies aimed at making homes more affordable. Here's the kicker. In these states where presidential polls often show razor-thin margin, there's majority support for the federal government to take action on housing affordability. And we're not just talking about a slim majority. We're seeing bipartisan agreement, especially when it comes to addressing the needs of low and middle income households. The survey presented respondents with information about current federal involvement in affordable housing and proposed expanding support beyond just low-income individuals. Some of the proposals included $40 billion in grants to repair or rehabilitate housing units for low-income families, expanding support for low-interest loans to home builders to spur new construction, a proposal for a $25,000 down payment assistance program for first-time homebuyers, and reducing large corporate ownership of single-family homes. And guess what? These ideas are gaining traction across party lines. Now, why is this significant? Well, in our current polarized political climate, finding an issue that bridges the partisan divide is like striking gold. It also proves we are all more alike than we are not. It suggests that housing affordability isn't just a niche concern. It's a kitchen table issue affecting families across the political spectrum. This could have major implications for the upcoming election. Candidates who can effectively address housing affordability might find themselves with a powerful tool to sway voters in these crucial swing states. But let's bring this back to you, the home buyer or seller. What does this mean to the real estate market? Number one, potential policy changes. If politicians start taking housing affordability seriously, we could see new policies aimed at making home ownership more accessible. This could range from increased funding for first-time homebuyer programs to incentives for developers to build more affordable housing. Market shifts. If government initiatives succeed in making housing more affordable, we could see increased demand, especially from first-time homebuyers who were previously priced out of the market. Long-term market stability. Addressing affordability issues could lead to a more stable and sustainable housing market in the long run. Remember, though, that policy changes often move slowly. While this consensus is encouraging, it doesn't mean we'll see immediate changes in the housing market. As always, it's crucial to make your real estate decisions based on your current situation and long-term goals, rather than speculating on potential future policies. Now, let's zoom out and look at the national real estate landscape. Despite some interesting developments, the market remains, well, complicated. First up, inventory. According to the National Association of Realtors, we're seeing a rise in housing inventory. Normally, this would be great news for buyers, right? More choices, less competition. But here's the twist. Buyers are still being cautious. Why? Well, it's a perfect storm of factors. High mortgage rates. We're still seeing rates above 6.5%, which is making many potential buyers think twice. Economic uncertainty. With talks of potential recessions and job market fluctuations, some buyers are choosing a wait-and-see approach. Affordability issues. Even with more inventory, home prices in many areas remain high relative to incomes. Speaking of mortgage rates, did you hear the latest from the Federal Reserve? Neil Kaskari, the Minneapolis Fed president, recently hinted that any surprise weakness in the job market could trigger a rethink on rate cuts. This is important because the Fed's decisions on interest rates have an impact on mortgage rates. Kaskari and other Fed officials are suggesting that while rate cuts might be on the horizon, the timing and pace will depend heavily on economic data. They're walking a tightrope, trying to bring down inflation without tipping the economy into a recession. For homebuyers and sellers, this means we're likely to see continued uncertainty in mortgage rates. My advice, if you're in the market, don't try to time it perfectly. Focus on your personal financial situation and long-term housing needs. Keep in mind, in the absence of competition, opportunities abound for the well-prepared and ready. All right, let's talk AI. Whether you love it or hate it, AI is making the rounds in every industry, touching many areas of our lives, including an interesting trend: the impact of AI on the mortgage process. A recent survey by CloudVerga found that 60% of Millennial and Gen Z homebuyers would shy away from lenders that fully rely on AI. CloudVerga CEO Maria Moscover highlighted an important nuance, stating, "They want the ease and efficiency of automated platforms and a borrower-friendly user interface, but they are still relying on loan officer involvement." This is fascinating because it shows a desire for a balance between technological efficiency and human touch in the mortgage process. In an age of algorithms, it's refreshing to see the hunger for authentic human connection is stronger than ever. What does this mean for you? If you're a younger buyer, don't be afraid to ask lenders about their use of AI and how they balance it with personal service. For real estate professionals, it's a reminder that while technology is important, the human element of our industry remains crucial. The takeaway: the market is evolving, but it's not just about the numbers and rates. The human factor, from political consensus on affordability to preferences in the mortgage process, is playing a big role in shaping our real estate landscape. Now let's dive a bit deeper into why the housing market remains so high despite these challenges. It's a question I get asked all the time, and it's our viewer question for today. The persistently high housing market can be attributed to several factors: supply and demand imbalance. Despite recent inventory increases, we're still dealing with years of underbuilding. According to NPR, it's estimated that U.S. housing shortage is somewhere between 4 and 7 million homes. Demographic shifts: millennials, the largest generation, are in their prime home buying years, and Gen Z is warming up quickly. This creates sustained demand. Investor activity: low interest rates in recent years led to increased real estate investment, driving up prices in many markets. Construction cost: the price of building materials and labor has increased, making new construction more expensive. Existing homeowner behavior: many homeowners who locked in low mortgage rates are reluctant to sell, further limiting supply. Economic factors: despite challenges, the job market has remained relatively strong, supporting housing demand. Here's my take: we may see some cooling or stabilization, but a dramatic drop in prices is unlikely without significant economic changes. My advice: whether you're buying or selling, focus on your personal circumstances and long-term goals rather than trying to time the market perfectly. Markets will always change, but what doesn't change is where you are in your life when you're making this decision. And always, do your due diligence and work with trusted real estate professionals. Now, let's address our viewer question. Why is the housing market so high right now? We've touched on this throughout the video, but let me summarize. Number 1, limited supply. Years of underbuilding have led to a housing shortage. Number 2, housing demand. Millennials are in their prime home buying years, and Gen Z is coming up quick, creating sustained demand. Number 3, economic factors. Despite challenges, relatively strong job markets support housing demand. Number 4, construction costs. Increased material and labor costs make new homes more expensive. Number 5, low inventory turnover. Homeowners with low mortgage rates aren't budging much. Number 6, investor activity. Real estate remains an attractive investment, especially in certain markets. Remember, real estate is local. While these factors affect the national market, your specific area may have unique influences. As always, research your local market conditions when making real estate decisions. All right, real estate warriors, it's time for action. If you found value in today's insights, don't keep it to yourself. Please tap the like button and share this video with someone who's navigating the real estate market right now. Your support helps to reach more people with honest and timely real estate information. And hey, if you're viewing on mobile, give that screen a little love tap to hype up this video. It really helps spread the word. Thank you. Got questions or topics you want covered in future videos? Drop them in the comments below. Your input shapes my content. Let's wrap this up with a quick recap. Number 1, housing affordability is becoming a unifying political issue in swing states. Number 2, buyers are cautious despite inventory increases. Number 3, younger home buyers have concerns about AI in the mortgage process. Number 4, the Fed is hinting at potential rate cuts, but timing remains uncertain. Number 5, the housing market remains high due to a complex interplay of supply, demand, and economic factors. Remember, in real estate, knowledge is power. Stay informed, stay proactive, and always be ready to adapt to market changes. That's all for today, folks. I'm Andrew Finney, and I'm here to help you navigate the ever-changing world of real estate. If you haven't already, hit that subscribe button and ring the bell to stay updated on all things real estate. Remember, keep your eyes on the market and your feet on the ground to stay true to you. Have a great day, and I'll see you in the next video. Peace be with you.